Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for July 29th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Price continues to trade within the very narrow trading range that we've seen built out over the last 2+ weeks. As a matter of fact, this range is super narrow compared to anything we've seen for this many of days going backward. I mean, it's just significant how narrow it is. And it has given us, despite the narrowness, it has given us great trading range boundaries to play on an intraday basis. Those 54s, 68s, it's been fantastic for balanced trade around those zones, but we know this will not last long, and we know that expansion is likely to come soon. So we got to continue to watch the edges for expansion. At some point, buying 54s and selling 68s will not work. But at this moment, we have to continue to play what's in front of us. At some point, we will see expansion. And if that expansion occurs to the downside, it will open up a retest of 2120. And again, as I mentioned, that could be an area to defend for bulls for another leg of strength ahead. Any failure to hold this zone would auction prices back toward composite value at 2085. But until then, we got to continue to play the edges of this range. So if we take a look here at the intraday time frame, you'll see right here that for the most part 54s have continued to hold. That was yesterday here. 54 was hit right on the button. That led to a 9-handle rally. It came back again, defended yet again, and led right back toward 67.5, which is the previous week's close. So far prices continue to trade off the 68s and 54s. And again this morning you can see pre-market anything in the 68 zone has been offered, and now prices are super tightly coiled today, pre-market. Anytime you get prices that are coiling up like this, obviously there's nothing really to do right here. There's no edge. You have to stay away right here, and you have to wait until price gets back up here, or wait till price gets back into the 54s down here. Once price does that, then you'll be able to fade it back to value. But up until then, this is nothing but chop. There's no edge here, and you have to be patient. So wait until price gets down here and then look to fade it back up, or look for price to get up here and fade it back down. Again, remember, this will continue to work until it doesn't. Once it finishes in this range, you're likely going to see expansion, and we're going to go from a trading range market state into that trending market state, that expansion state. So we got to be patient. All right, let's take a look at crude oil now. Here's crude oil. This one continues to be significantly bearish. Very bearish. We knew that could be the case. We talked about how price was just coiling up here around value. We talked about the ominous rounded top pattern, and if this was going to break to the downside, we knew 42s was the next key level to watch for. We hit those 42s. Now we're just blasting through 42s, and we just hit a low here into the 40-70s. Very important. The next major key level down is going to be 39, 37, and 35. So basically those are the next major levels down that we're going to be looking for in crude. In terms of 39, that's the next major key level here. That was a big separator in price. So any bounce, should this see a bounce, any bounce will be a selling opportunity on a swing basis. But right now crude has been so bearish that no bounces have been seen. And this is not likely to stop anytime soon. We will know when it stops, and even if it does see a bounce again, any day, any 1 day, 2 day, 3 day bounce will still be a selling opportunity until we get down to these 35s. Remember, the goal was that if prices were being offered at value area high above 50, that would lead to value. Chopping around value and taking that offer should lead to prices below value, and that's 37s. So we still have a lot more to go to the downside before we get back below value, and this market is completely bearish. Looking at this in an intraday time frame, you can see here basically everything going backward has just been down. It paused here briefly, momentarily, then broke to the downside, was not able to get back above the range, and that opened up another wave of weakness. Again, every bounce, even that bounce here late in the session, was a selling opportunity. This bounce here in overnight trading, still a selling opportunity. So again, we may see prices develop some sort of range on these lows, but any bounce still will be an opportunity for bears to jump on the bandwagon here and push this thing lower. So right now, to the downside, based off of average 10-day range, we have our primary bear target on the day at 40.25, and the 100% bear target is just below that at 39.93. So on an average day, over the last 10 sessions, we will likely see a move into 39.93, although this will be our primary bear target. So any pullback right now could be a great selling opportunity for 40.25, and eventually by the end of the day, we may see 39.93. Okay, let's take a look here at gold now. Here's gold. Gold has been quite bullish here short term. We have seen a little bit of a pullback here, and this is important because this pullback will likely lead to the next swing move up into our target zone of 1370 to 1380. We talked about 1306 to 1310 being a significant area where bulls wanted to defend, and then we saw the stops come out on this day here two days ago. This pullback offered a buying opportunity as things held, and now what we're seeing right now is in overnight trading. Look at this. Price pushed below the previous session's low and is already seeing a rejection of those prices back higher. And if we see a continuation of this theme here, that could slingshot these prices right into the next area of resistance between 1370 and 1380. Obviously, 1352 is the key main divider between these price distributions here. So you got to pound through that level, and that'll open up the next wave of buy stops above. So right now, gold continues to be bullish. Pullbacks likely to be defended. Any failure to hold above 1330 could open up a retest back toward these lows. But again, any retest in this zone is still a buying opportunity until proven otherwise. Lastly, let's take a look at the NQ. The NQ finally reached our 4730, which is the next major level up. Above 4550 here, the next key zone of resistance was that 4730. You can see it plain as day right here. And that's what we just reached in the previous session. I talked about before that we were seeing no signs of rejection above 45.50, and that implied a continuation toward 47.30, and we've now reached it. Now we have to see how prices respond above 47.30 because there's really no history above there. You can see there's no real trading above that zone, so it's going to be uncharted territory here. We got to see how this plays out. At some point, obviously, I keep saying we may see some rejection, and that could lead to the first pullback opportunity. But until then, buying pullbacks is still a great opportunity to get into the up move. Typically speaking, pullbacks toward the midpoint of the previous session are defended, and you can see this little dot is the midpoint of the previous session. That's currently the overnight low, and it's currently being defended. So any failure to hold that level would open up a move back into 46.80, and that's a big time key level right now, short term. So still an uptrending market, still quietly bullish here. We have not seen rejection, and you got to continue to follow the current trend. Looking on an intraday basis, you can see here that prices are still rejecting above that 47.30. So here's 47.30. We hit it late in the day yesterday, and you saw a big rejection. Then in overnight trading, here it is again, rejection. Here it is again, rejection. Here it is again, rejection. So already 47.30 is showing some sort of signs of rejection above those areas, and we got to see how it plays out. At the moment, we are chopping very, very quietly right around this value here, 47.21.5, and there's no edge here. So you have to wait until price either returns up here to find some rejection back down, or you have to wait till price gets a little lower, perhaps 47s, to play it back up. So short term right now, there's really nothing to do in the NQ. You got to wait until price unravels away from this coil. Otherwise, you could get chopped to death in here. So you got to be very, very careful about being whipsawed in your trades. Wait for the edges to be played. But at the moment, we know that 47.30 and anything above has been rejected. So you have to watch that zone very closely for signs of perhaps a rotation back downward. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.